lot of traders struggle to make money, and one of the main reasons is they simply cannot read what price is telling them. In this video, I'll be able to go through what market structure is, how you can read it, and how understanding market structure will help you be able to predict the market is trying to tell you. First things first, what even is market structure? Why is it important? Market structure helps us identify what price is looking to do. Without being able to identify the trend and see the patterns that the market and price is making for us, it will be extremely hard for us to try and predict what to do next. What we need to do is simply be able to identify the trend. Are we bullish or are we bearish? Are we looking to buy? Are we looking to sell? Understanding these basic things will help us understand whether we are trading with the trend or against the trend. You can take counter trend trades or trade with the trend, absolutely up to you. However, trend is your friend, and I know you've heard it many times before, but it is true, especially in the beginning. Trading with the trend will make your life 10 times easier. Just some useful information before we jump onto the charts. A bullish market means that price is going up, and a bearish market means that price is going down. Bullish markets have higher highs and higher lows, and bearish markets have lower lows and lower highs. With that being said, let's have a look on the charts. The market has highs and the market has lows, which is exactly the first step that we need to take in order to identify, are we bearish or are we bullish? All you need to do is find yourself a high and then find yourself a low. Once we have these 2 points, all you need to do is grab yourself this tool to make things a little bit easier for you, especially once we go on to the actual candlesticks. It might get a little bit confusing. So now that we have identified our high and our low, all we need to do is simply wait and see if price is going to break and close above our high or break and close below our low. Until then, we don't know if the market is bearish or bullish because all we have is a high and a low. There isn't a high high, no higher low, lower high, etc. This point right here is simply market structure. It is nothing because the market hasn't yet closed above or below our high and low. However, at this point right here, price has finally decided to close above our high, creating a higher high, which means that we have shifted bullish. Because remember, bullish markets have higher highs and higher lows, and bearish markets has lower lows and lower highs. Since we have a higher high, we now need to identify our higher low. And the way we do that is simply grab yourself this brush tool, pretend that this is a path, okay? You're walking on a path until you have to change direction and no longer have a path to walk on. That is where your higher low goes. In this instance, it is this point right here. All we do is label this as our higher low, and now we have a higher high and a higher low. We know that the market is bullish. As simple as that sounds, that's it. Of course, this is just a super simple example. All we would then do is continue to move our lines to our higher high, then our higher low, and continue to see what the market does. Let's look at another example. The same exact thing applies to this example. All we have to do is find ourselves a high and find ourselves a low. Once we have our high and low, all we need to do is draw our little lines to make it easier to read the market and see what we are doing. Remember, we do not shift until the body closes below or above our high, okay? The wicks do not count as a shift of structure. We now have our high and our low. All we need to do is simply wait and see, will price break above our high or will price break below our low? Remember, this point right here is simply market structure. We have stayed within our zone. We haven't closed above our high or below our low. So at this point right here, we are still unknown, okay? We don't know if we are bullish or bearish because it's simply market structure. However, if we continue looking, this point right here is where we close below our low, creating ourselves a lower low. So then, since we have a lower low, we also then need a lower high, which again, same thing applies to bullish and bearish markets. We take our brush, keep walking, pretend as if there is a path there. The moment we have to change direction and no longer have a path to walk on is the moment this becomes our lower high. So this point right here changes from market structure because we have shifted lower, which then we have identified it as now our lower high. With that being said, this is an example of a bearish market. Super simple example. So let's now go on to the charts. The same exact thing applies when you are actually looking at the candlesticks. All we need to do is find ourselves a high and a low. I would say start in the middle of the chart, never start where price currently is, because then if you identify this as your low and this as your high, then you don't know, did it break above or did it break below? So you're basically just shooting yourself in the foot a little bit because price hasn't actually done any breaks just yet. So you don't know if you are bearish or bullish. So starting in the middle would be the best idea. With that being said, let's pick our high and pick our low. So if this is our high, this can be our low. All we have to do is draw our little lines and see, do we break above or do we break below? You can see that price has closed below our low, which means it has created a lower low, which now means that we have to find our lower high. Remember, it is the body that has to close. It doesn't count if the wick is there. It has to be a full body closure. So we have our lower low. That means we are bearish. All we have to do, take our tool, keep walking, keep walking. The moment we have to change direction and have no path to walk in is the point where we identify our new lower high. In this instance, it is this area right here. So then all we do is just simply move this to down here and keep waiting for the same thing again and again. Do we break below our lower low? No, but we do break above our lower high, which means we have shifted back to bullish. We were previously bearish with lower lows and lower highs, but we have shifted back to bullish with a new higher high at this point right here. And get quite repetitive because all you have to do is identify your high high. Once you have your high high, you need to have a higher low. Same thing, if you have a lower low, you need to identify your lower high, but it is good practice. We take our tool, keep walking, no more path to walk on, so this point right here becomes our new higher low. What we have to do is simply move our lines, and then we can label. You can keep moving these to make it easier for you to see. All we have to do is simply change that to a higher low, meaning we are now bullish. Do we close above our high or do we close below our low? We do nothing, which means if price is at this point right here, it is simply market structure, okay? Remember, wicks do not count as a closure. In order for us to actually shift structure, it does have to be the body rather than the wick like it has done right here. And that's it, guys, okay? Market structure can be very, very simple, but a lot of people do overcomplicate it for no reason. You can use market structure to help you identify the trend to see, are we going up or are we going down? You can then use it to identify your areas of interest. You can use it for so many things if you just understand which way are we going. Are we bearish or are we bullish? And it is super simple, but so many people get this wrong. Once you understand this, it will make trading so much easier for you. And that is it. That is all you need to do in order to be able to identify market structure. I will do another video which is more advanced. This one is for beginners specifically, but I wanted to do an introduction for you guys to show you that market structure really doesn't have to be difficult to read. And once you understand how to read market structure, what price is actually trying to tell you, it will become a lot easier for you to see, are you looking for buys or are you looking for sells? With that being said, I hope you enjoyed the introduction to market structure. More detailed videos will be coming, so make sure you leave a like, comment below, and if you want to learn my exact trading strategy and jump on the live call on Sunday with the students, make sure to click the link in bio and join the True Wealth community. And don't forget to subscribe.